Well, welcome back to the Sprott Money News and SprottMoney.com Ask the Expert series. It's your final one for the year 2021, as it is now the month of December. I'm your host, Craig Hemke, and joining us this month is Dr. Quinton Hennigh. Many of you will recognize him. He's one of the co-chairman of Novo Resources. He's a renowned geologist and someone that is highly respected in the precious metals industry. He's also now an advisor and director at Crescat Capital in Denver. Quinton, thank you so much for joining me this month.
Thank you, Craig. Pleasure to be here.
It's great to have you on. I know this is your first time, and we've gotten quite a few questions for you. I'll get to those in just a second. Though, of course, I just want to remind everybody, this content comes from Sprott Money, so be sure to keep them in mind for all of your physical metal and physical metal storage needs. And, of course, it's the holiday season. Don't forget that Eric is in the giving mood this year. If you haven't already, be sure to catch Eric's year-end wrap-up. He and I recorded that last Friday. That audio is linked at the Sprott Money page. You go to the Insights tab. Not only does he chat about junior miners everybody's been asking about, he's also giving away five, count them, 10-ounce Sprott silver bars. If you'd like one, all you got to do is go to that Insights tab on Sprott Money, find the details. What you do is you head over to Wall Street Silver's Reddit page, you hashtag Sprott Money, and then you tag 3 of your friends. That's all you got to do on the Sprott Money contest post. That will get you registered. All those details are on that Insights tab at SprottMoney.com. And again, that's where you can find the podcast wrap up that Eric and I recorded just a few days ago. Okay, with that, Dr. Hennigh, let's dive right in. Can I hit you with question number 1?
I love it this way.
All right, here we go. With this one, I think is right up your alley. With a few currencies in the world continuing to weaken, is there a preferred gold producing or exploration country that you prefer? Like Brazil, Turkey, that sort of thing. Does the currency regime kind of change how you look at a jurisdiction?
Yeah, look, we do consider jurisdiction, obviously, in investments, and it's important. Part of that is the exchange rate, okay? And there are places which are absolutely hands down great places to be right now in the gold space. And what you just said is spot on. Brazil is certainly one of them. We got several investments there. I would also rank Australia very highly and Canada very highly. So yes, I would put those kind of three at the top of our list. It's not to say there aren't other countries that are great to mine gold, but as far as jurisdictions go, those are our top 3.
Well, that's going to give me a chance to kind of segue and to the next question, which was further down the list, but I'm going to slide this up to number 2. And this is on that jurisdiction line. Because I always tell people, and I know Eric has always said this, if you got a good team that has done it before, and if you're in a jurisdiction that has produced metal in the past, that's, you're 2/3 of the way there. But on a broad sense, kind of countrywide, Quinton, when you consider the rule of law, respect of the rule of law, the permitting process, how friendly they are toward mining companies and that sort of thing, what are the best countries, the best jurisdictions that that you like to see?
Again, this is, like one of the top considerations we make when investing in storage, and we focus on safe jurisdictions, period. Okay, Canada, hands down, number 1. I'd actually, Ontario and Quebec traditionally always are great, but Newfoundland can't beat it. Okay, Newfoundland is a wonderful place to invest, and I actually have a great deal of optimism about British Columbia at this point. I think British Columbia and the kind of the advancement in the way things are working with First Nations and stuff is heading in the right direction. I see a lot of really good, progress being made, I guess is the best way to put it. And I can see mines will get built. Beyond that, look, Australia is certainly a close second. There is a bit of stuff that's in a state of flux right now in Australia, given the Rio debacle a couple of years ago. It has stirred up a lot of passions, and there's a lot of political motion at this time, which needs to kind of settle down. And once that clarity is in hand, I think the ranking of Australia will settle down again. I think it'll be a strong place to invest, but there is a bit of uncertainty there. U.S. is still favorable, very favorable. You have to look at it state by state, of course, in the U.S., but we love Nevada. We love Arizona. There's other places where we're seeing kind of a diminished status. Peru is certainly one politically, and then Mexico. Some of the rhetoric and stuff I've been hearing out of Mexico gives me a bit of pause. I like Brazil a lot. I think Brazil is actually moving in the right direction. And funny enough, Bolivia is moving in the right direction. We have a big investment in El Oro, of course. And I see Bolivia at about the same level, say Peru was late 1980s, early 1990s, when things started getting cleaned up and really heading in the right direction as far as mining investment goes. So that's kind of our general tone around jurisdiction.
Well, then let's move on to question number 3. And I thought this is kind of a long question. I'm just going to read the whole thing to you and pick it apart from there. It is stated, in previous years, we've seen old mines with amazing grades closed down as metal prices slumped. With prices climbing now, we are seeing some interest be renewed. Is it possible from a geological standpoint to intercept super high grades again, or even very economical grades at current prices?
Look at Fosterville. I mean, that was a mine that just basically slogged along, at about 4 or 5 grams per ton for 2 decades or something. And it took them that long to mine 1 million ounces. I mean, it was a long haul, but they find the high grade zone right below this low grade. So geologically, certainly, if the question is, are there opportunities to replicate that? Absolutely. There's other deposits, other opportunities out there where there's existing mines that might have a hidden gem like that. So I like to see companies, develop a thesis around those kind of stories and test them. But maybe I'm not quite understanding the question. How would you interpret that, Craig? Like, what do you think the person is asking here?
Well, I think it's the way I read it. It's like, okay, there was a lot of gold there, and now we've shut it down. Is it a feasible business plan for some companies to go back in and go, I bet there's some more?
I see. Look, that's always the best place to look for gold is right next to a gold mine. So yes, there are opportunities like that where there's mines that did shut down due to low gold prices. I would say less so this cycle than in previous cycles. I would say the cycle in the late 1990s, that one really killed a lot of mines. The downturn, say in 2013, where we started to drop down to 1,300, 1,200, 1,100 gold, that one killed a few mines, and I'm starting to see some of those stories resurrect, I guess is the best way to put it. But I don't think we have as many, the inventory of those opportunities is not as robust as it was, say, 20 or 30 years ago.
All right. Well, hey, we're already halfway done. How about that? We are just rolling along. All right. This is a fun one. We've seen, we had the Kirkland Lake Agnico Eagle thing that happened recently. And then we had Kinross with Great Bear. So all of a sudden, there's at least a little bit of action in the M&A space. This question just is written that way. If the future is so bright for mining stocks, why isn't there more M&A? Want to try that one?
It is very cyclical. M&A is part of the overall cycle of the mining space. The clock that Bob has, the mining clock, I guess you call it, or exploration clock is an example of, a way to look at that cycle. And it happens every time. I can remember back in 2004, 2005, and 2006, I was at Newmont at the time. And, I remember what the company was doing internally, looking at opportunities at that point, but also looking around at some of the deals that were starting to be cast about. Goldcorp was very aggressive and picked up, who was it? Glamis and can't remember, Meridian or something like this. Anyway, there were a number of deals back then that are like the deals that you're seeing right now that really forecast the up and coming gold boom. Okay. And I think we're starting to see those rumblings here. It always starts out slowly. I know people want instant gratification, but Look at Great Bear. It took them 4 years of drilling to get to where they are. And, the fact that Kinross is taking them out right now is really kind of a warm up back to what I think is coming. I think over the next 2 or 3 years, a lot of the exploration stories that have been kind of trundling along here, and there's a lot of them, are going to be the food for the next M&A cycle. So I'm really optimistic about where this is headed. The majors need these deposits, and these high grade ones, all the better. These are really high quality deposits that are just absolutely necessary to perpetuate the mining industry.
Don't you think, Quinton, you've been at this so long. I mean, things have changed where people want 50% in a day, like GameStop, that sort of thing.
Oh, it's crazy, man. I'm telling you, like the instant gratification phenomena has become very acute lately. I would say really over the past year and a half. Yep. And I think that's because you have seen a lot of the easy money, stimulus money, whatnot, go into the investment space. But it's very short term. It's very short thinking. You see a lot of, like you said, meme stocks and stuff just behave completely irrationally. But you also see a lot of ETFs just, they have money just being thrown at them, and they park it in, guess what? Apple and Microsoft, yeah, and the FANG stocks. All right, this is irrational, man. And what does it feed? It feeds short-term thinking and this instant gratification. Look, life is not really like that. Okay, I don't care what planet you live on. Mining is longer term, as we know. In fact, it's getting longer term. You have to permit stuff and do ESG and so forth. These are not things that move along at light speed. But if you invest in mining, you're going to be way better off. This is where intrinsic value is held and created. I'd rather have mining stocks over the long haul than ride the Bitcoin pony up and down every day like a lot of these folks do. So bring it on. This is a great opportunity.
Yeah, it presents opportunity for those willing to do their homework and have some patience.
Yep. That's right.
But that's what's in such short supply at the present time. All right, question 5 is one that I'm glad came in because I was dying to ask you this myself. In that call last week with Eric, he mentioned that he's still heavily invested in Newfoundland. I think actually he now physically owns a large part of Newfoundland. If you want to even buy a rental house, you got to ask him. Right? But anyway, he still loves it. And Newfound Gold, they had their nuggety drill samples that freak people out and all that kind of stuff. The question doesn't deal with that. The question is just simply Eric loves Newfoundland. But what about nobody? I want to hear you explain this. What about that geology there makes it so compelling?
Well, Newfoundland shares a lot of similarities to the Victorian goldfields in Australia. Obviously, that's the home of Fosterville. And look, there were many, many mines before Fosterville. There were, famous mines around Bendigo and Ballarat and Castlemaine and stuff. These were all, high grade, very famous mines of years gone by. But it is a district that's known for producing high grade orogenic gold deposits. In particular, at Fosterville, you seem to have this supercharged system where the depth that the deposit formed is relatively shallow, so it's kind of what we call epizonal in nature. It's also probably got some sort of connection to granite magmatism that happened there, and the granite seemed to really supercharge these epizonal systems. In Newfoundland, you see the absolute same ingredients. In fact, it's so spooky that even the age of the host rocks is identical to what you see in Victoria. So we have the same suite of host rocks, the same types of host rocks, age is the same. And we also see this phenomena with these granites that are hovering nearby. And I think all of the ingredients basically are in Newfoundland like they are in Victoria. Now, one of the things that's really critical about Newfoundland is the level of erosion. It seems that the entire northern part, certainly, perhaps maybe the whole, all of Newfoundland, has been eroded down to kind of this critical level in which these epizonal deposits proliferate. Okay, so Mother Nature has basically, cut down this Earth's surface down to this level where you see these very, very high grade deposits. And that's why you're seeing so many of these discoveries. I mean, Newfound obviously is the leader of the pack, but you see other companies, Lab Gold, which is right next door and really on the same district. And then you have Sokaman and, probably a dozen others like Ethos. Ethos has sampled some absolutely phenomenal grade stuff here. And they're on a different structural line, but they're in the same package of rocks due north of Gander. Ethos, I looked when I was kind of advising Ethos at the time. When I first looked at the photos of the textures of the quartz and the gold particle size and so forth, I said, this is epizonal. It has to be. And they picked up the property at that time. I think once they get to drilling, I think that'll be a very exciting discovery. But look, there's other companies too. Like the whole area is ripe for these high grade discoveries.
Fascinating. And it's really, again, the patience required, to watch this play out. Again, how backed up are the assay labs at this point, right? I mean,
look, the fact of the matter is, with like Newfound, I think we have like 30,000 meters or something in queue right now, and the backlog is partly just due to the fact that they wanted to check out the laboratory and its protocols and make sure, and QA/QC and stuff. And all of that's now checked out. In other words, there's no issues that have been identified. So we're very content to go ahead and get these samples through. They're also trying the Chrysos machine over in Australia right now. It took forever to get those samples through customs, which is just bloody annoying. But they got the samples through customs, and as I understand it, they're processing those right now. That will give us good data. The company's going to have a whole huge pile of assays come out in Q1 of 2022. So sit tight. Don't worry about the story. It's the gold's there. I remember when Kirkland hit, some of the high grade at Fosterville. My gosh, everybody's scratching their head, going, "How do we verify this? How do we reconcile this?" Because it's the same type stuff. It's simply nuggety gold, and it ended up being a wonderful story. Okay, so I'm not worried about Newfound. Newfound or any of the companies operating in Newfoundland. It is what it is, and these assay protocols, they work. So we're back on track, and we'll have lots of numbers here soon.
Terrific. All right, Quinton, one last question to wrap up the year of Ask the Expert. So this is the last one. This gets to that homework we were talking about and people trying to decipher on their own what's good and what's bad. And this might be too broad of a question, so just answer it however you can. How does someone quantify what is a good or bad drilling result, or a promising versus a disappointing drilling result? Is it easily quantifiable by, grams per ton, that sort of thing?
Look, I'm going to give you two answers here. Okay. There's a kind of high level approach, and then there's we'll call it the 401 level approach, like, the advanced class level approach. Now your first level is this, and quite frankly, a lot of the major mining companies use this as a rule of thumb. They watch drill results come in from many, many companies. You look at news releases every morning, and when the drill results come in, you simply multiply your grams gold times the length of the intercept, and you determine how many what we call gram meters there are. Okay, and look, statistically, when you start to see drill projects in which they're hitting 100-gram meter holes or above, they don't all have to be that, okay? But as long as some of the holes are, say, 100-gram meters or above, those systems tend to deliver an economic discovery. It's just, purely empirical, okay? Those kind of results tend to forecast the likelihood there's going to be an economic discovery. You might only need, a handful, like maybe 3 or 4 holes out of a list of 50 might have 100-gram meter, but still that's a good omen. Okay. And yes, major mining companies use that as kind of a threshold, to understand the success of various exploration projects around the planet. Now, the second answer I'm going to give is, look, that's a very high level view. You also have to do the deeper dive at some point. You can't just go, oh, that I see 100 gram meter holes here, this is the winner, and just take it, for granted at that point, like this is a winner. Okay. You also have to then start doing a bit deeper dive and watching the story over time. Look, a great example, Great Bear. Okay. They drilled many holes. I don't know how many holes, but hundreds of holes, between 2017 and 2021. Now they're being taken out by Kinross. Okay. If you go back and look at that story, if you're a passionate investor, a long-term investor, you would systematically go through news release by news release and look at all the results and keep a table, put a spreadsheet together, like put in your computer, take all the results. It might take a little typing, but put them into your own spreadsheet and keep track of this stuff. Okay. You can actually start to come up with, but on your own, you can start to come up with volumes of rock that are mineralized. You can start to get an understanding of geometry. These are not complicated things. They're, what's the volume of a tabular shape, like a box. Okay. Well, you can figure that out. And the density is, about 2.7 is average density. Okay. There's not rocket science here. Okay. And then what you do is you start looking at the drill assays within that volume that they're targeting. And you say, okay, I've got, 120 holes here, and the average interval, the average width is this, and the average grade is that. And you can start to actually rationalize things and truly keep, build your own model. You can keep track of things, and you have to do that over time. You can't just, if you're a short-term investor, like we were talking about earlier, where you want instant gratification, you trade on news, whatever. This isn't a message for those people. This is a message for quality investors who want to stick with the story and keep track of it from news release to news release. Build your own database, okay? Understand the geometry and sit there and progressively calculate what the deposit is. You can actually forecast. I guarantee you 99% of the people who listen to this broadcast and invest in this space can forecast their own resource by doing simple math.
It reminds me, I first was a stockbroker 30 years ago. Kind of reminds me of what it was like to be a stockbroker 30 years ago and earlier. You'd contact the company, you find out how they're sitting, like the old Peter Lynch strategy. Remember with the Magellan Fund? You go actually eat at the restaurant and see what it's like and talk to the customers. I mean, you could do your own homework back now. It's not like that anymore, but that's kind of what it's like, Quinton.
Yeah, it is. We need to get back into that mindset. I love it when investors are well educated. Okay, I do not like money that's kind of flaky and fly by night. I would rather see investors in the mining space who have a really good handle on what the actual goal, what the geology and the goal of the company is, and they invest for the right reasons, not just a quick buck. Okay, so if we want to see a sustained rally in the gold space, smart investors are what are needed.
Yep, no doubt. And as you said, it's not rocket science, but it's rock science, right?
It's a good way to put it. Yep.
See what I did there, Quinton?
There you go.
All right. Well,
very funny.
All right. Again, we've been speaking with Dr. Quinton Hennigh, renowned geologist and advisor and director at Crescat Capital in Denver. I think you probably found this very helpful and interesting if you've been listening. So be sure to send a thank you to Sprott Money. Check them out. Go there, sprottmoney.com. If you maybe some last second gift ideas, sign up for the newsletter so that whenever there's new content, you're immediately notified. Oh, and do us one last favor. Wherever you're listening to this, YouTube or some podcast channel, give us a like or even subscribe. That'll help us cast a wider net and get more of this great information out there to the public. Quinton, thank you so much for your time. This has been fascinating.
Always a pleasure, Craig.
It's great stuff. Merry Christmas to you and all of your family. And from Sprott Money News, happy holidays, a peaceful, relaxing holiday season to everybody, all the Sprott Money customers, everybody that listens to these podcasts. It's been a crazy 2021, and who knows what 2022 has in store, but we'll keep cranking out this information for you. And we hope between now and the start of 2022, everybody gets a chance to relax and slow down and have a great holiday season. Quinton, thanks again for your time. Thanks again, everybody, for listening to Sprott Money News at SprottMoney.com. And we'll talk to you again in 2022.